the week, which is headed our way and just packed in terms of economic data. Now traders, I want to bring in our market strategist at Agora Financial. He's joining us live from the floor of the CME. Alan, we just got labor and jobs data. Let's talk the dollar, because last time we had you on, he talked about how the dollar continues to pivot around. Gone anywhere this week. We saw it inch back above 97, but this morning it's coming back off in a holding pattern around 96.
It's just teaching us a lesson. And it did not make new highs when it had this bounce here recently. So we'll have to wait. All the currencies right now, we've got to wait for a breakout. Now, just when you give up on things, a major move will occur. A great example of that is, and I know we're not talking about Bitcoin as a currency, but 4,000 for many weeks, and then all of a sudden it breaks out just for the sake of breaking out. So it's important, once there is a breakout, whatever the catalyst is how it follows through or fails to follow through. So the initial breakout could be a fake out breakout. We'll have to wait and see.
All right, talk to me, Alan. While today's job data wasn't necessarily a catalyst to provide that breakout out of this range, is it possible that non-farms payroll later this week will be enough to do it, enough to actually move the market here and get the dollar out of that 95 to 97 range?
Wow, that'd be hard pressed to happen, in my opinion. If you look at the ADP number here today, they did, it was a little bit lower than expectations, but they did revise the other month upward. So, on balance, it's net not that bad. The market, in my opinion, hasn't been making that much noise about what happens with these payroll numbers. We've been on a steady pace for many months and many years, and now going on a decade. So, it is what it is. I don't know what's going to come out that's going to give this market this final nudge, but eventually something will happen. That's what happens in these markets. That's why we do what we do.
Alan, talk to me, because you mentioned that the market's not really making much out of these payroll data, the numbers that we've been getting. I mean, we saw that last month with that non-farm payrolls coming in 20,000. For the most part, the market traders discounted that. I'm wondering if that means that this month we're going to be more focused on the revision to last month. You mentioned the ADP, the revised higher. I think there's a lot of expectations that we're going to get the jobs data on Friday with a higher revision. But I'd imagine if not, then maybe traders are going to start to wonder, is that a bit of a concern to see labor starting to soften a little bit, considering it's been the pillar of strength?
That's if you believe that the Fed is data dependent. So now, has that changed as well? Has that situation completely gone out the window? Do they care about what the data, or is it how they feel inside that's going to determine the Fed policy now that now that there's a thumb on the scale? So that's the million-dollar question. I facetiously said a couple of weeks ago that obviously it's all about the macro markets, and we've seen that with the comeback that we've seen in stocks, we've seen in oil. Oil back above $60, that's a very positive sign, for macro. And the stock market, pushing up, continuing to make this stair-step higher new highs. But what I said at the time still holds true. It's all about Apple. Apple's stock got above the 185 level. 185 was the halfway point of that drop from the top. That's a very, very healthy sign for the market in general. We could easily see a full V recovery in the stock market, and we'll be off to the races once again.
Wow, sounds like you have your eyes on highs here, Alan. Let's talk a little bit about Brexit. Sounds like Theresa May has become, a bit more willing to work with and not so much against some of her foes and her most vocal critics like Jeremy Corbyn.
Yeah, we'll see. But what does that mean to the currency? What does that mean to their stock market? If you look at the FTSE's holding, and if you look at the pound, it's right around the 132 level. It's not taking out those tops. I think that could possibly be the path of least resistance. Again, a relief rally is what could be set up here. It's been a very positive sign that it's held ground so well with all of these just missteps, misfortunes, and anything that could go wrong has gone wrong. So again, the price action I have to interpret as positive until seen otherwise.
Yeah, anything new though? I mean, because she's expressed her willingness in the past, but we still have no deal.
Yeah, but it seems impossible, and I know that you don't want to say that in this world, impossible they can't come some sort of agreement, that they can't come up with some sort of something. It's just not feasible that they're going to make themselves their own little island. It just doesn't work in this global economy. It's just not, it's not possible. I mean, there's politics and then there's politics, and at some point reality has to set in. Stubbornness gets you so far, but I don't think the reality is real. I mean, the only other possibility is if people don't want to nullify a vote by having another vote, then they could make a fake Brexit exit. I don't know what you Fexit, and they leave for one day and then they come back and then they have a vote and then they vote to come back. So I mean, that's the only other real political way to solve the problem based upon the way people are dug in, but it really doesn't seem to matter because there has to be a solution. Just like when we're talking about, the China trade, that's the issue of the day, as is every day. These are issues that were man-made. These were created issues. And the China trade deal, yeah, okay, we solved the China trade deal, but it wasn't it wasn't a cataclysm, it wasn't catastrophe beforehand.
Yeah.
Some of these things are self-created issues that once they're solved, they get put behind and the markets move forward, as they often do. But what's important here is the markets have priced in what they thought the issues would be solved. They priced it in a long time ago, and that's the path that we're on.
Yeah, I want to get your thoughts on some comments from Ford of Europe Chairman Steve Armstrong. He told the Associated Press that a no-deal Brexit would be a disaster for the automotive industry in the UK. Do you agree? I mean, and if so, Alan, this would only be a setback, a further setback. They had a little bit of disappointing PMI services number out this morning. We know the UK numbers, for the most part, have been struggling and suffering as all this uncertainty kind of weighs on them. I mean, do you expect, or in his words, do you think that it would be disastrous as well?
Yes,
okay.
But the market doesn't reflect the reality of that actually happening. No one's fully convinced that that's possible. Looking at the price action, looking at the FTSE, looking at the pound, the market's not telling us that that's even a realistic possibility. Now, the markets could be completely wrong, and all heck could break loose. But as it stands right now, I've got to have confidence that the people that are holding the bids here have a little bit more insight than I do when it comes to what's happening across the pond.
Alan, one more question. I just want to get your thoughts on rates, which have been coming off recent lows. We've been watching treasuries for the most part come off the highs. Is this tied more towards the indices rallying back, do you think, over the last couple of days, or is this more towards some of the economic data out of Europe, which has really been better than expected for the most part all week?
I think it's just more normalization of stocks moving up and demand for bonds slowing there. So yeah. You had a big move, a big extreme move where it felt like somebody was caught heavy, and we've seen repeated talk in the last couple of weeks about cutting rates twice as a new Fed policy. So I mean, I don't know what to believe anymore. Again, when it all comes down to it, you gotta trust what the markets tell us, and that's what's gotten us this far from little traders to full grown-ups at this point.
Well, we'll continue to do that, and it certainly has been a learning experience, and that's why we bring you on, Alan, to help school us in terms of some of the ins and outs associated with the today, the currency markets. Really appreciate you joining us here and giving us part of your day. The traders, that's Alan Nuckman. Thank you, Alan. That's Alan Nuckman. He's the Chief Market Strategist at Agora Financial. Now, what a great segue on